A new banking policy may be affecting your Social Security deposit, and here is everything every recipient needs to understand right now. If you are currently receiving Social Security, SSI, or SSDI benefits, please give this your full attention for the next few minutes. A significant new banking policy is being rolled out across the United States, gradually and quietly, and millions of older Americans have absolutely no idea it could directly affect how and when their monthly benefits arrive in their bank account. We are talking about your monthly income, the money you count on for groceries, prescription medications, rent, and the basic expenses of daily life. This is not speculation. This is not political commentary. This is a genuine, ongoing policy development that financial professionals are describing as one of the most consequential changes to affect seniors' bank accounts in recent memory. Could your deposit be delayed? Could your account be restricted without any advance warning? Could new identity confirmation requirements temporarily block your access to your own money? These are the questions every American over 60 deserves to have answered. Today, not at some point down the road, I am going to walk through all of it in plain, straightforward language. No complicated banking terminology, no government jargon, just the information you need to protect your benefits and maintain your financial peace of mind. Let us get into it. How we arrived here. The background you need to understand. For many decades, the American banking system has operated under a set of rules specifically designed to protect consumers, including seniors who depend on fixed income sources like Social Security, SSI, and SSDI. These protections were put in place following hard lessons learned from financial crises, bank failures, and situations where ordinary people lost access to their own money through absolutely no fault of their own. The system was never perfect, but it had meaningful safeguards built in, and for most people receiving federal benefits, those safeguards meant one thing. Your monthly deposit would arrive reliably, land securely in your account, and be ready to use without complications or delays. But something has shifted. Over the past year or so, a series of significant regulatory discussions have been taking place at the federal level. Inside agencies like the Federal Deposit Insurance Corporation, the FDIC, the Consumer Financial Protection Bureau, the CFPB, and the Office of the Comptroller of the Currency. These are the agencies responsible for overseeing how banks operate throughout this country. And the conversations they have been having are directly connected to how banks process government benefit deposits, how accounts are verified, and what happens when a bank flags an account for closer review. Most people never hear about these conversations because they unfold inside regulatory documents and policy meetings that the average person never encounters. But the effects of those conversations reach all the way down to your personal checking account. And that is why this matters to you directly. So, what is this new policy? And why does it matter? In plain terms, the policy centers on something called account verification and fraud prevention protocols. Banks have been facing intense pressure from the federal government to combat fraud within the benefit system. Billions of dollars have been lost to fraudulent Social Security claims, identity theft targeting seniors, and fake accounts created specifically to intercept benefit payments before they reach legitimate recipients. That is a serious problem, one that absolutely needs to be addressed. But here is where it gets complicated for you. The way some banks are choosing to respond to that pressure is creating real and unnecessary difficulties for entirely legitimate seniors who have been receiving their benefits without any issues for years. Here is how it plays out in practice. When a bank receives a deposit into an account that its systems flag as unusual, or when an account displays patterns that automated software identifies as irregular, the bank has both the right and, under the new guidance, in some cases, the legal obligation to hold that deposit, conduct a review of the account, and in certain situations restrict access to the funds until that review is fully completed. For most people, that might sound like a minor inconvenience, but for a senior who is depending on Social Security and counting on that deposit to cover rent on the first of the month, A hold lasting even 3 to 5 business days can be genuinely devastating. We are talking about missed rent payments, an empty refrigerator, prescriptions that cannot be picked up. This is not a minor matter. It is a real crisis for people living on a fixed income with no financial cushion to fall back on. And the situation becomes even more layered than that. The new guidance also addresses something called Know Your Customer requirements, rules banks are already required to follow, but which are now being expanded and updated. Under these requirements, banks must confirm the identity of their customers and ensure that accounts are being used appropriately. For most younger customers who regularly update their information, use mobile banking apps, and respond quickly to emails or text notifications from their bank, this process is largely seamless. But for seniors, particularly those who do not use smartphones, who have limited internet access, or who simply do not check their email every single day, a verification request from the bank can go completely unnoticed until it has already created a serious problem. What this looks like in everyday life. Let me paint a picture of what this actually looks like for a real person. Picture a 74-year-old woman named Dorothy. She has lived in the same apartment for 15 years. She has had the same checking account at the same bank for more than 2 decades. Every single month, her Social Security payment arrives in that account on the second Wednesday of the month, like clockwork. She uses it to cover her bills, buy her groceries, and pay for her medications. One month, her bank sends her an email asking her to verify her identity as part of a routine compliance update. Dorothy does not check her email very often. She misses the message entirely. 2 weeks later, her account is placed under a temporary review hold. Her Social Security deposit arrives on schedule, but she cannot access the funds while the review is in progress. She goes to the bank in person and is told she needs to bring 2 forms of identification and proof of her current address to resolve the matter. It eventually gets sorted out, but not before she has missed a bill payment and gone several days without access to a single dollar of her own money. That situation is happening to real people right now, in communities across this country, without warning and without the kind of clear guidance that would help them resolve it quickly. What about federal protections for Social Security deposits? You may be asking yourself, is there not a federal law that protects Social Security deposits from being frozen or withheld? And the answer is yes, there is. Federal law does provide meaningful, genuine protections for Social Security and other federal benefit payments that are deposited electronically into a bank account, specifically when a bank receives a garnishment order, meaning a legal attempt by a creditor to collect a debt from your account. The bank is required to review the account and protect a certain amount of money representing federal benefit payments from being seized. That protection is real, and it matters. However, and this is a critically important distinction, that protection applies specifically to garnishment situations. It does not prevent a bank from placing a hold on your account for compliance or identity verification purposes. Those are treated as entirely separate matters under banking law. This distinction is enormously significant, and it is one that many seniors and even some financial professionals are not fully aware of. So let us be absolutely clear. If someone is attempting to seize money from your Social Security benefits to satisfy a debt, that is generally not permitted, and the bank is legally required to protect those funds. But if the bank itself has flagged your account for a compliance review, or if there is a suspected fraud concern connected to the account, the bank has legal authority to restrict your access while that review is conducted. Understanding your rights in each of these situations and knowing exactly what to say and do if this ever happens to you is what makes the difference between a quick resolution and a prolonged, stressful ordeal. Special considerations for SSI and SSDI recipients. Let us take a specific moment to talk about SSI, Supplemental Security Income, because the situation for recipients of this program is somewhat different and in certain respects even more vulnerable. SSI is a needs-based program, which means it is specifically designed for individuals with very limited income and very limited financial resources. Monthly payment amounts are lower than Social Security retirement or SSDI payments, and the people receiving SSI are frequently among the most financially fragile Americans in the country. For an SSI recipient, losing access to their benefits for even a few days is not an inconvenience. It is a genuine emergency with no easy solution. And yet, SSI recipients face the exact same account verification challenges as everyone else, and sometimes even more significant ones. They may be less likely to have established credit histories. They may be more likely to live in shared housing arrangements that complicate address verification. And they may have more limited access to the types of documentation that banks typically request during a compliance review. SSDI, Social Security Disability Insurance, presents its own distinct set of challenges within this new banking environment. SSDI recipients have contributed to the Social Security system through their work history, but are unable to continue working due to a qualifying disability. Many are managing serious health conditions that affect their ability to respond promptly to bank inquiries, travel to a branch location, or navigate complicated bureaucratic verification procedures. Some are living with cognitive challenges, limited mobility, or mental health conditions that make these kinds of administrative tasks genuinely demanding, not just inconvenient, but legitimately difficult in ways that are hard for others to fully appreciate. The new banking guidelines, because they were developed primarily with fraud prevention in mind, do not always account for the very real barriers that people with disabilities face when trying to satisfy identity verification requirements. That gap between policy design and lived reality is something every affected person deserves to know about. What you can do right now to protect yourself. Understanding that the problem exists is only part of the equation. The other part, the part that actually matters, is taking concrete steps to protect yourself before a problem develops, and knowing exactly how to respond if something does happen. Let me walk you through this carefully, because I want you to come away from this feeling genuinely informed and prepared, not anxious or overwhelmed. Step 1. Update your contact information with your bank. The single most important thing you can do right now is make absolutely certain your bank has your current, accurate contact information on file. This sounds almost too simple to mention, but you would be surprised how many people have not updated their phone number or email address with their bank in years, sometimes a decade or more. Banks are increasingly relying on automated systems to send compliance and verification notices. If those notices are being sent to an old phone number or an email account you no longer regularly access, you may never receive them, and you will not find out something is wrong until your account is already under review. So this week, not next week, not next month, contact your bank either by phone or in person at your local branch. Confirm that they have your current phone number, your current mailing address, and if you use email, your current email address on file. This single straightforward step can prevent a tremendous amount of difficulty down the road. Step 2. Understand your bank's direct deposit policies. Take the time to learn what direct deposit protections currently apply to your benefits at your specific bank. Visit your branch and ask a customer service representative to explain clearly and in plain terms their policy regarding holds or compliance reviews of direct deposits from the Social Security Administration. Ask specifically what kinds of situations trigger a review. Ask how long a review can last. Ask what you would need to do to resolve a hold if one were placed on your account. Write down what they tell you. Note the name of the person you spoke with and the date of the conversation. Having this information in hand in advance means you are not trying to figure it all out in the middle of an already stressful and urgent situation. Step 3. Consider maintaining a small emergency reserve. If it is at all practical for your situation, consider whether you could maintain a small emergency reserve in a separate account, even just a few $100s, that is not connected to your primary benefit deposit account. I fully understand that is easier said than done for many seniors living on a fixed income, and I am not presenting this as a requirement. But even a modest financial cushion can give you critical breathing room if your primary account is ever placed on hold while a review is conducted. This could be a basic savings account at the same institution, an account at a local credit union, or even a prepaid debit card that you keep funded specifically for unexpected situations. Whatever form it takes, having that small buffer available can make an enormous difference during a difficult few days. Step 4. Keep important phone numbers where you can find them immediately. Know the direct phone numbers for both the Social Security Administration and your bank's customer service line, and keep them somewhere you can locate instantly. Written on a notepad kept by the phone, stored in a simple list on your refrigerator, whatever works best for you. If there is ever a problem with your deposit, time is a genuine factor. The sooner you can reach the right people, the sooner the situation can begin to be resolved. The Social Security Administration's main phone number is 1-800-772-1213. They are available Monday through Friday from 8 in the morning until 7 in the evening. If you have any concern about your deposit, they can confirm whether the payment was sent, when it was sent, and in what amount, which is essential information for any conversation you then need to have with your bank. Step 5. Designate an authorized contact on your account. If you have a family member or a trusted friend who helps you manage your finances, consider asking your bank about adding them as an authorized contact on your account. Not necessarily as a joint account holder, simply as someone the bank has permission to communicate with on your behalf when needed. This can make it considerably easier and faster to resolve account issues, particularly if your ability to engage directly with the bank in person or by phone is limited by health, mobility, transportation, or other personal circumstances. What about changing banks? I want to address something that comes up frequently in conversations about this topic: the question of whether to move your benefits deposit to a different bank. Some people, after learning about these new compliance guidelines, have seriously considered transferring their direct deposit to a different financial institution where they might receive more personalized attentive service. And I want to address that thoughtfully, because it is not a decision to approach casually. Changing the bank account where your Social Security, SSI, or SSDI is deposited requires you to update your direct deposit information with the Social Security Administration. That process typically takes 1 to 2 full payment cycles to take effect. During that transition window, it is critically important that your previous account remains open so that no payments are disrupted during the changeover. If you decide to make a switch, contact the Social Security Administration before you close your old account. Make absolutely certain the new account is fully established and confirmed before initiating any changes to your direct deposit instructions. Credit unions are worth mentioning specifically here because many seniors have discovered that credit unions offer a more personal, community-oriented banking experience that can sometimes be more flexible and accommodating during compliance review situations. Credit unions are member-owned financial cooperatives rather than shareholder-driven institutions, and they often have more discretion in how they handle individual customer service situations. Credit unions are federally insured up to $250,000 through the National Credit Union Administration, just as bank accounts are insured through the FDIC. If there is a credit union in your area that you have been curious about, it may be very much worth a visit to ask about their specific policies for handling federal benefit deposits. Be aware of financial scams targeting seniors. I want to spend a moment on something that is closely connected to this banking policy issue, and that is the alarming increase in financial scams specifically targeting older Americans in connection with these developments. Whenever there is uncertainty or confusion in the financial system, dishonest individuals move quickly to exploit it. And right now, there are people actively exploiting news about banking policy changes and benefit updates to target seniors with deceptive phone calls, fraudulent emails, and misleading text messages. The most common version of this scheme works like this. You receive a call from someone claiming to represent your bank or the Social Security Administration. They tell you that your account has been flagged and that your benefits may be interrupted or suspended unless you take immediate action. They then ask you to confirm your social security number, your bank account number, or other personal financial details over the phone, urgently, right now, before something terrible happens. Please hear this clearly and keep it with you. Neither the Social Security Administration nor any legitimate bank will ever call you unexpectedly and ask you to provide your Social Security number or bank account information over the phone. If you ever receive a call like this, end the call immediately. Do not engage with the caller. Do not provide any information whatsoever. Then contact the Social Security Administration or your bank directly, using the phone numbers you already have on file, not any number the caller may have provided, and report what happened. Staying alert to this kind of scheme is itself a meaningful form of financial self-protection. Bringing it all together. As we wrap up, I want to briefly summarize the key points we have covered so you can carry this information forward with confidence. We walked through the new banking compliance policies and how they relate to fraud prevention measures that can sometimes result in holds or delays affecting federal benefit deposits. We drew the important distinction between garnishment protections, which are robust and meaningful, and compliance hold policies, which involve considerably more complexity and far less clear-cut protection. We addressed the particular and heightened challenges facing SSI and SSDI recipients. We went through 5 concrete, actionable steps you can take right now to protect yourself. We covered scams, federal deposit insurance, and the specific resources available to you. And above everything else, I want to leave you with this thought. You are not without options in this situation. Yes, the banking system is complicated. Yes, the rules are changing in ways that are not always communicated clearly to the people who are most directly and immediately affected by them. But you have rights, you have resources, and you have people who are fighting to make sure you have access to the information you need. The more informed and prepared you are, the better positioned you will be to protect your benefits, safeguard your financial security, and respond effectively if a problem ever arises. That is precisely why content like this exists, because you deserve to have this information delivered in language that is clear, trustworthy, and genuinely useful, not buried in regulatory documents or hidden in fine print that nobody reads. Stay informed, stay protected, and please take good care of yourself.